Mavericks. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and here we are in the third week now of August. I can't believe this year has gone by this quickly, but it's been a great trading year, so I have no complaints whatsoever. Let's start off with last week. Last week we had a bullish market, and a lot of people have been fighting this bullish market up. We've talked about how, technically speaking, it was a bull market in equities, and you just had to be bullish even though you may not have felt like it. Well, we got our fourth consecutive up week, and we're now up 16% off of the lows on the NASDAQ. Everything is looking a lot better. Now look, I know that you may not feel better. I know that there's still problems out there, but this is where technical trading trumps everything, because it doesn't matter how you feel. What it matters is what the chart says. And the charts have been overwhelmingly bullish over the past month. So we've had to be on that side, and it's been a good run. We got lots of good news on inflation. We got, on Wednesday, the CPI had a 0.0% headline number. The core dropped from 0.3. So you can see less inflation than was expected. And then on Thursday was, I think, what the really big news was. We actually had a PPI of negative 0.5%. So that means that inflation on the producer prices actually went lower. There was actually deflation in those prices. It was a very positive outlook for the inflation worries, because now people aren't as worried about it. And now they can go back to saying, okay, well, if we're not worried about things, well, then let's go ahead and put some money to work. We also got GDP out of the UK. It was better than expected. It was still a contraction, but better than expected. The pound went down. And so this is where we always love to take notice of these things. When good news comes out and a currency goes down, it tells you, hey, I want to go down. Like, it doesn't matter what the news was, I'm on my way lower. We also had a good consumer sentiment number out of the US. So let's take a look at the charts. Let's see what we saw from last week. Last week we had, again, big gains. S&P up 2.6%, VT up about the same. Crypto had a great week, and this headline number doesn't really show it as much as is, but Ethereum just had a great week, up 11%. The first time we've really seen momentum come into cryptos for a long time. Gold was up, oil's up. As you can see, everything was up. If we take a look at the S&P, we broke out of this little bit of resistance here. So once we cleared out of 4160-ish, all of a sudden you can see that we are heading higher. And now our next stop is all the way up there at that 4320 at the 200-day moving average. Everything in this chart looks bullish. You can no longer be bearish. We've been saying that for the last 2 to 3 weeks. It is proving that the charts are telling you the truth, regardless of how you feel. If we get into foreign currencies, you can see the money poured into the Aussie and Kiwi. People are looking for growth. They're looking for excitement. And so they're pouring into these things. Take a look at that Swiss franc, though. That Swiss franc shouldn't have been up on a week like this, but it was. Again, we take note when a currency shows us, hey, I shouldn't have been up last week, but I went up. It tells you that it wants to go higher. It tells you that it wants to go. Big story, the dollar finally came down. And again, those inflation numbers absolutely crushed dollar. And I think dollar is a short at this point. We'll take a look at all the charts, but I actually think there is better shorts out there than dollar. But dollar definitely is looking now more like a short than a long. Ankit, what did you think about the move in the Aussie and Kiwi this week?
Hey, Rob, I think this is definitely the first week that we are noticing these moves in the currency markets, because we have seen the equity markets turn corners like a few weeks ago. But the currency market has been really anchored. Right? We haven't seen those risk-on or risk-off moves like, Aussie being up. So I think but just before this week, Aussie and Kiwi, both, they were sitting at a zero-turn score. So I think as we're looking at this market, maybe it's acting late, but it's finally making its move that we have been kind of looking out for the past few weeks. And I think maybe the dollar is really the one that really moved the needle, because as the dollar remains strong, it kind of puts this pressure on some of these currencies. So I think that's where the big story is this week. But it's it is moving finally the way it's supposed to. And I think maybe as the market is, if it stays strong, I think we will have a little bit more catch up to do within the currency market as these trend scores improve and we get some follow through. So I think we have a good price action on hand, and hopefully that should continue in the next coming weeks until something changes in the market. I think it's nice to see when those two things kind of connect and do exactly what it's supposed to.
And whenever we see these strong risk on moves, and again, we've seen a market going up, but we haven't seen risk on. We haven't seen people taking risks and really going after things with reckless abandon. We saw that this week. And so whenever we see action like that, this is where the cryptos do the best. And we've been talking about Ethereum. We thought Ethereum has been the best for a long time. And you can see up 11%. So if the market stays hot, I think cryptos are also going to stay hot. But we'll take a look at all the charts individually. Let's go through our market analysis for the week. We've got, again, a +2. This is a moderately bullish market. We are about to go to a +3, which is a wildly bullish market, but we still need to clear out of some certain levels. So let's take a look at the VT. The VT is lagging the S&P. You can see that we have not cleared out through that resistance that we had in June. We expect that it will clear out, but again, it's lagging the S&P. We take a look at cryptos. Cryptos have had a nice move. We've gone from basically 9,000 on the crypto basket up to about 13,000. So we've had a nice 43, 44% move higher. Cryptos are starting to run into some real serious overhead resistance right in this, 14,000 area. So again, this is the crypto basket. This is where we put all the cryptos into a basket, averaged them out. So it is moderately bullish, but I do think we're going to start running into some overhead resistance. Next week on the schedule, we've got lots of news happening. We've got CPI out of Canada on Tuesday. And then really Tuesday night, we've got a lot of things happening. We've got RBNZ, big deal. And we also hear from the Aussie wage price index. This is going to be prime trading opportunity in both Aussie and Kiwi on Wednesday night. I expect there to be some big moves. The expectations are for a 0.5% rate rise from the RBNZ. I think we're going to see some fireworks here based on that. They are holding a press conference an hour later. That may be where the actual big news comes out from that press conference. We will be meeting live as a firm and trading that live at right before 10. Wednesday, we get the rest of our data this week. We get CPI from the UK, we get retail sales from the US, and we get employment change from Australia. So this week, we've got equity markets that are likely to remain bullish. We've got one central bank announcing this week on Tuesday, RBNZ, and then we got lots of reports on Tuesday, Wednesday. So Tuesday, Wednesday in my book is going to be the best trading opportunities this week. So I want to be active on those 2 days and a little bit less active after that. Let's take a look at some currencies. Starting off with the cryptos. The cryptos have finally shown me that, okay, they're ready to be bought. Now look, it doesn't mean they have to go higher at this point. And a lot of people say, well, geez, Rob, why didn't you buy them back down at the bottom? Well, guess what? You don't know where the bottom is until it hits the bottom, and it really spends a lot of time building a new trend. This is really the first time we've been able to say cryptos have now done all of the technical work to say, okay, we're now in an uptrend. Now look, that uptrend could end today. We have no idea. But all we know is that at this point, the technicals are telling us it is now okay to buy these on the long side. So let's take a look at which one is the best. So as you can see, Bitcoin here, 24,000. We could probably run all the way up here to, maybe 28,000 before we hit some resistance. We'd have to look back in resistance, but there is some area here that we could move. The question is this the best crypto right now? It's having a pullback. There's nothing all that great here. We take a look at Bitcoin Cash. Bitcoin Cash, we see lots of sideways lately, lots of sideways. This is not having a great bounce. So for me, Bitcoin Cash is not what I'm looking for. I'm looking for something a little bit better, showing a little bit more velocity. Here we come over to Ethereum, and Ethereum looks much, much better on a chart. We can see ascending triangle pattern here. We just broke out of it, and we are just setting up a high base here on our velocity score. A breakout above, let's call it 1910. 1910 is going to be another buy signal here on Ethereum on the long side. Litecoin, it is basing, but again, it's when Ethereum is breaking out and running and the other currencies you're looking at are basing, it's telling you they're underperforming. They're not as good. Remember, we make money off of trading. The only way you make money as a trader is if you are on the side of supply and demand. If you're on the right side. We don't know right now, supply and demand is balanced on Litecoin. We don't know when that's going to change. What we do know is right here, right now, Ethereum has an imbalance. And that's where we should look. That imbalance could change tomorrow, but we at least are jumping on the train as it's moving, not jumping on a train hoping it moves. So Ethereum is definitely the best buy here in the cryptos. Let's take a look at Forex. On the dollar, we had that break, and we talked about this last week, and we said, hey, if this dollar does break this last low, then we could really have a big change in trend. We have a 20 crossing below a 50 moving average. We've got a new low here, and on the velocity, we're just basing here. So on a low base here, I like this on a breakdown of low base. I do like short dollar. Anka, what's your call on dollar?
Hey, I think dollar looks interesting here. But one thing I do want to point out as we try to look for the best versus the worst, I mean, the dollar is weak, but I also want to make a point that we also have euro, which is also very weak. It's broken nicely on the daily chart as a currency basket. So, I think it just really comes down to picking, what's really moving at that time. I think the dollar looks weak, but I think euro even looks more weaker to me. And even if we take a look at DXY, which a lot of traders, take a look at just to see the dollar direction, DXY has a heavily weighting with the euro dollar, and the DXY is actually still sitting at 50-day moving average. So I think as we look at the currency baskets, it's giving us a true reflection of what the dollar is doing. But I think at the same point, the dollar might not be the weakest. It might just consolidate a little bit, but I think there's other currencies really in the running here, which could really take that charge. So I'm mildly bearish on the dollar, and here's a reason why. I think we still have a higher expectation for, again, the Fed to stay hawkish. I mean, despite these developments, what's the Fed's going to do? I think that's really the question. So I don't really expect the Fed to really be dovish here. So I think the dollar outlook could remain mixed, where we have a better clarity on other currencies that are making a move. So that's really my call here, Rob.
I totally agree with everything you said, and I think, yes, the dollar's weak. I think there's better trades out there. Let's jump over here to the yen, because the dollar and yen have been negatively correlated over the past couple of weeks, and it's been the best place to be. When we take a look at it, I was really hoping to see yen strength because I wanted to keep playing dollar yen because it's been such a great trade lately. I wanted to keep playing it, but here's the problem. Dollar is weak, but then look, we got a really pathetic bounce off this moving average here. And I just don't have confidence that the yen is going to stay as strong as it was. With that being said, I think the fact that dollar is weak and euro is weak is going to make yen hold up. So I'm at a true neutral on the yen. I don't like it for a long or a short here. So I'm going to be looking at other places. We jump over here to the Swiss franc. We talked about how the Swiss franc really should be going down. It's a currency of safety. We had a risk on move. Guess what? It doesn't want to go down. It doesn't want to go down. So I'm telling you, this is a sign. It's saying, okay, we're just waiting for this breakout here, and we think there could be a nice run in Swiss franc. We have no idea when this momentum is going to change. Right now, we are just basing, going sideways, and we've been in this for a month. We've just been doing this for a month. We don't know when the Swiss franc is going to break out. Just put it on your watch list and be ready for it. When it does, it'll be ready for a trade. Until then, I think it's just waiting and watching. We always want to find currencies that are moving now. Swiss franc is moving sometime in the future. We want to find what's moving now. And here we have euro. We've got this really nice descending triangle. We are breaking down with some momentum. This one looks great. So I'm going to start the week off as looking for short euro trades. I've been watching euro for a while for shorts, and I think this week is the week for a euro short.
Hey, Rob, I just want to quickly add there, but as we take a look at euro, I mean, there's one thing that we need to take a note of is this negative correlation. A lot of times, we see those currencies when they are very positively correlated, you know, they move kind of in tandem. But again, right now, what we have is two very strong negative correlation, dollar versus the yen, and then we have euro versus Swiss franc. And I think as we take a look at the euro Swiss franc cross, the Swiss franc remaining strong because the euro is acting as a much weaker currency, and then we have the negative correlation kind of in play as well. So I just want to point that out that, you got to keep that negative correlation in mind because right now that's what's really working. And that's the reason why Swiss franc is not the weakest, actually stronger, where the euro is weak. And it's the same way as sometimes we get dollar being the strongest and then we get the yen being the total opposite. I think that's really what's working in this kind of markets. So something to keep an eye on with these strong negative correlations.
Absolutely. Absolutely true. Moving on to the pound. So hopefully you can see why, yes, we like dollar short, but you can't ignore that there's more momentum in euro and in the pound short. There's a lot of momentum to the downside. So we like both of these trades short, euro and pound. Let's see what we can go long in because right now we only have Swiss franc that's showing some relative strength. We jump over to Canadian dollar here and you can see it's following the dollar. There is some correlation there with the dollar. So we expect there to be probably not great movement to the upside, but we definitely don't want to be short Canadian dollar. There's just better shorts out there. So right here, right now, I think Canadian dollar is on the shelf until we find some better momentum. Coming over here to Aussie, this is where the momentum is. We just broke out. We are going to be running into some overhead resistance. We think there's a little bit of room there still before we get up there. So I like this trade early on in the week. So, a euro Aussie pairing would be great. A pound Aussie pairing would also be great. So we like Aussie on the long side. And boy, if you're looking for where the momentum is, it's in the Kiwi. Now, I want you to take a look at this area right here. We had all of these upper shadows. We just kept hitting this resistance. When it finally broke out, there was a lot of power behind it. And we have broken out through even this last resistance point up here. So yes, the Kiwi has had 3 big days. It would not be surprising at all to see it have a pullback. But guess what? The momentum is there right here, right now. So we like Kiwi as well on the long side. This is the breakdown. We've got Aussie, Kiwi, Swiss franc, and some of the cryptos. We like Ethereum the best on the long side. And then we've got euro, pound, CAD, and dollar all on the weak side. We love when markets are like this. When markets aren't trending strongly, when we have everything in a 0 to +1, trading is a little messy. When they're trending strongly, this is when you get the best moves. If we take a look at velocity, though, right now we're taking a little break. So we have strong trends, but things are consolidating, and that's great. That is great for going into next week because we're seeing lots of basing. Love it to have bases on a Friday. Then we can start next week really watching these bases, and whatever breaks out, we're going to go try to catch it. So it's pretty easy this week. Aussie, Kiwi, Swiss franc on the long side, euro, pound, CAD, US dollar on the short side, but really euro and pound short, Aussie, Kiwi long. That's really going to be the trades we want to take a look at. So let's pair some of these up. I also want to take a look at euro, Swiss franc. I think that's a good potential trade as well. My number one trade for the week is euro, Kiwi. So euro the weakest, Kiwi the strongest, and just take a look at this. I mean, take a look at this low base and just how long we were in this low base. And you can see that we were in there for weeks and weeks and weeks. We finally broke down, and there's a lot of power behind this. So you can see there's really no resistance to even go back to until really last May. Lots of power here to the downside. So the only question is, when do you get on? And sometimes these trades are hard to get in, especially if you're waiting to be very disciplined. And on trades like this, when there's so much power, sometimes it's more important just to get in them. Look, you don't just wildly abandon all your charting experience and everything, but you definitely want to be very aggressive on the entries and say, okay, I'm not looking for the perfect setup. I'm just looking for something decent, something good. So we just had a move lower. We bounced up. We had another move lower. On any bounce up at all, if we could get to something like, here, like the 159.40 area, man, I'm going to be licking my chops. If we can get a little bounce to there, I think that is a great entry. If not, I might just get short a half a position just to get in the position and then add to it as it starts to go my way, or add to it if I do get that little bit of a bounce. So this is my number one trade for the week is Euro Kiwi. I just want to take a look at Euro Swiss Franc. Euro Swiss Franc, and I want to take a look at this on a daily chart. And Euro Swiss Franc are typically pretty positively correlated. You can see for most of 2022, it's been about around 103, and then all of a sudden we just got a real strong negative correlation. This reminds me of 2011 when we saw this. Very strong. So again, the question is, sometimes these are hard to get in because again, they just keep running. Every day they fall, and you're trying to be patient, waiting for an entry. Sometimes you just say, hey, you know what? I'm going to get in. I'll get in with a small position. Then if I do get a bounce, I can add to that. But sometimes it's more important just to get in these really strong trending ones. So Euro Swiss Franc I like as well, but Euro Kiwi is my favorite. Ankit, what do you want to take a look at?
Hey, Rob. Well, definitely, I'm on board with you. Those are the pairs that are actually moving. So I think it's good to pay attention to those. They're good continuation patterns. So my watch list is a couple of pairs that I think has the potential to move, but they might not be in the running yet. So Kiwi Cat is the first one. Again, we're just talking about next week. So we have the CPI figures out of Canada. So, I mean, we noticed the tight correlation between U.S. and Canada, and let's say if the inflation numbers have dropped or cooled down in the U.S., I would expect kind of similar effect in Canada as well. And if the Canadian dollar, which is like sitting right there in a -2 trend score, but again, velocity is not there. If that's the next one to target, I mean, this pair is ready to go higher. And I mean, we can see that these pairs I pay attention to because of correlation and relative strength of weakness. And you can see that the CAT has actually done the web best. You can see where the move has been. We have chopped around the entire month of July and August in that 79, 50, 80 to now this level. So I think this has potential to go higher, especially if you're looking for a combo trade, meaning get in on the CPI print on I think believe it's Tuesday or Wednesday when we get the CPI print out of the Canada. I think that's a great way to build up a position going into the RBNZ base statement. And if they are looking to hike and if the price action stays bullish, I think that could be a good little combo trade there. So I really like this on this chart on the longer term. The another one that I do like, especially if the yen picks up, is the euro yen. I think it's worth taking a look at it, especially if the velocity picks up in the yen. I think euro yen on the daily chart looks beautiful as one pair that I really like as a short, especially in these yen crosses is this one. Now, if you draw that trend line, I mean, we got a similar pattern back in July. We rallied up. We kind of failed that rally, and then we had a massive drop off of that. So we are moving in this downward channel, and I think the price action, you can see, we went aggressively from 133 up to 137. So I think this has a potential to go lower, especially if the yen starts to pick up. So again, what we are doing is we're trying to pick currencies that would work the best for those scenarios where one currency is actually doing really better. So I think that's the one that I really like here. But I think next week, like you said, I think it's a good solid. It looks like a good solid trading week. We might consolidate some gains. I mean, this is a big week after Aussie and Kiwi posting big gains. But I think next week we could see some continuation off those news events. So I like the way things are setting up going next week. And remember, it's all about sentiment. Now, the currencies were not really had the great sentiment. Now the sentiment is improved, which means that there's more chasers to those moves. More people flock into things that are moving than things that are not, and they're just trying to figure out which way it wants to go. So I think this week gives a clarity, and next week could be just a follow through movement in these currencies. So that's my outlook, Rob. Back to you.
I totally agree that this week is looking likely just to be a continuation of the moves we had this week. I think these are the kind of trades that you love because trades are tough sometimes. Sometimes you get in, they rocket against you, and then they are choppy, and then sometimes they're just smooth. And I think this time it's just smooth. All these moves are very, very smooth. And again, take a look at go back to Euro Aussie. These moves are smooth. We don't have huge runs. Even if you got short a little late here at 146.75, it didn't rocket up against you. You were able to stay in these trades because they're really one direction. So we really like this week for trading, and we think it's going to be a great week. To wrap this up, the equity markets are bullish. The trending scores have improved. So this is the kind of trading environment we do like, where we have very clearly defined trends. Always follow the relative strength and weakness. We built that velocity score for a reason. We always want to be trading the stuff that's moving now, instead of trying to get into the stuff you think is going to move sometime in the future. No, just get into the stuff that's moving now. That's how you make it as a trader, is to be on the side of the imbalance of supply and demand. Check our schedule for our content this week. We do have a live session Tuesday night for the RBNZ meeting. And as always, we have our live session on Wednesday. So we'll see you there. Thanks for joining us, everyone. Have a great weekend. Goodbye.